The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast. How's it going, everybody? Welcome back to Trajecta Talks. I'm your host, Alex Savanovic, and for those of you who are new, I'm an experienced hedge fund trader, and this podcast is all about demystifying the world of finance for you, the next generation of leaders, innovators, and investors. Today, we have a super special episode. We're stepping outside of our usual format to bring you a conversation with someone who's living the finance life that we often talk about. He's someone who has navigated the demanding world of a major financial institution and has a front row seat to one of the most dynamic sectors, real estate finance. I am incredibly excited to introduce my good friend and a true leader in his field, Joshua Sunwoo. Joshua is a senior analyst in the real estate finance division at the Royal Bank of Canada, that's RBC. Ticker symbol on that is RY. One of the largest financial institutions in North America. Now, before we get to the interview, we do have to do our market update. There was a ton going on in the tape this week, so let's jump right into that. So this week, it was filled with a mix of high-stakes corporate partnerships, a major new deal that's raising some eyebrows, a massive order for a beleaguered aerospace giant, and a report from a key semiconductor company that left the market wanting just a little bit more. Intel is back in the news, and it's a fascinating turn of events. Following a controversial 10% stake taken by the US government, Intel is now reportedly shopping for more investment, and they've approached a familiar but somewhat distant partner, Apple. It's an interesting move, especially given that Apple has famously shifted its focus to its own Apple silicon chips, moving away from Intel in a major way. The rumors suggest that Apple may be considering a significant investment to help bring more chip production back to the US, a move that would also align with the Trump administration's priorities. It truly highlights just how critical the issue of domestic chip manufacturing has become and how companies like Intel are looking for support from all corners to remain a force in the industry. So moving along from Intel, let's talk about a different semiconductor company. Let's talk NVIDIA. A lot of buzz this week has been around a major deal between NVIDIA and OpenAI. The two companies have announced a strategic partnership where NVIDIA will invest up to $100 billion in OpenAI progressively as the AI pioneer deploys at least 10 gigawatts of NVIDIA's systems. So, on the surface, it sounds like a massive vote of confidence and a huge deal for both sides. I get it. NVIDIA ripped on the news, and I'm sure if OpenAI was public, it would have ripped on the news as well. OpenAI gets the capital to build out its infrastructure, and NVIDIA locks in a multi-year customer. Now, here's where things got a little bit hairy this week. The details of the deal have caused a bit of a stir, and in my opinion, it took some steam out of the AI boom's recent rally. So, this is essentially a vendor financing deal, a circular financing structure where NVIDIA is providing the capital for its customer, OpenAI, to buy its own products. The financial arrangement, often referred to as vendor financing, like I said before, means that NVIDIA is not only providing the product, but also the money for OpenAI to buy it. So it's a deal that benefits NVIDIA's revenue and validates their AI hardware demand, but it's not a true independent investment from a third party. The market initially reacted with a surge, like I said, but as the details have been digested, and there was plenty of analyst reports that came out after highlighting this issue, the stock has given back the majority of its gains. I think at some point today, it was all of the gains. It's a classic case of initial exuberance followed by a more sober reality check once the fine print is understood. This type of deal, while common, can be a red red flag for savvy investors who are looking for genuine external validation of a company's business model. The fact that the capital is being recycled within the ecosystem suggests a potential lack of interest from other investors in a direct cash infusion, which could signal underlying risks or a less robust business model than the hype actually suggests. So, moving on to our aerospace company that we mentioned in the beginning, in a much needed piece of good news for Boeing, the company announced the single largest order in the history of Uzbekistan Airways. The deal is for up to 22 of its 787 Dreamliners. The purchase includes 14 firm orders with options for 8 more of the wide body jets. This is a significant win for Boeing and provides a positive signal for the company, which has been under intense scrutiny and pressure from a series of operational and safety issues. The order is a clear vote of confidence from a growing international airline and is a step towards rebuilding market trust. So now it's been pretty dead, but we did get Micron earnings this morning, and I'm very excited to talk about that. They released their quarterly report, and it was a strong one on paper. The company reported record-breaking revenue of over $11 billion, driven by explosive demand in the data center and AI segments, particularly for its high bandwidth memory, or commonly referred to as HBM products. They also exceeded their own updated guidance on both the top and bottom lines, which in a normal market would have been cause for a huge rally, but the stock was soft in trading the first day of the report. So why is this? The market, it seems, is still jittery, and in a time of such high expectations, a good report isn't always enough. And if you watched Micron's price action going into this report, I don't remember the exact percentage, but it has had quite the rally, so it would have needed to really blow out expectations to rally even more. While Micron's numbers were impressive, the stock's performance suggests that investors were already pricing in this strong performance and we're looking for something more, perhaps an even more bullish outlook or a definitive sign of continued hyper growth. This is a trend that we've been seeing with some of the best performing stocks in this market. They get punished for simply meeting high expectations rather than blowing them out of the water. This good but not good enough reaction has significant read-throughs for the rest of the memory chip industry. While Micron's strength in HBM is a clear competitive advantage, the tempered market reaction could be a sign of what's to come for other players. Companies like SK Hynix, a major competitor in the HBM space, and Samsung, which is also rapidly expanding its memory business, are facing similar pressures. Their own strong results may not be enough to trigger a major rally if investors are already anticipating really stellar performance. Furthermore, the sustained demand for memory chips from companies like Micron is a positive signal for semiconductor equipment manufacturers, but even those stocks may be subject to the same high expectation fatigue. Investors are now looking for sustainable, long-term growth stories, not just a single impressive quarter. Finally, another major headline this week comes from Oracle and Meta, who are reportedly in talks for a massive multi-year cloud computing deal valued at around $20 billion. This is a huge potential win for Oracle, who has been aggressively pursuing these mega deals with AI companies. It would provide Meta with the crucial computing power that it needs to train and deploy its AI models, and it's a clear move by Meta to diversify its cloud providers beyond its current relationships, particularly with Microsoft. For Oracle, it further cements its position as a major player in the cloud infrastructure space, proving that it can compete with the likes of Amazon and Google for the biggest contracts in the AI race. So before we officially wrap up the market update, I just want to say that I think the biggest takeaway from all of this is the circular nature of the market right now. The NVIDIA OpenAI deal in particular demonstrates a kind of self-feeding frenzy. It's a financing structure that ultimately just pushes more capital into NVIDIA's own ecosystem. The fact that NVIDIA gave back all its gains post-announcement is a clear indication that the market is getting weary of all the exuberance. We're reaching a point where investors are no longer just buying on hype. They're scrutinizing the details, and the AI boom, so to speak, may be showing its first signs of vulnerability. But I don't want to be all doom and gloom. We have an awesome podcast lined up for you today. I'm very excited. That's the market update for this week. And let's dive into our interview with Joshua Sunwoo. All right, everybody, we've got Joshua Sunwoo here with us from RBC. Josh, buddy, how are you doing today?
I'm good. How are you doing, Alex?
I'm good. I'm super excited for this interview. I know you've got a lot of intelligent things to share with the audience. So if you're okay with it, I'll just pop right into some of the questions that I had. Are you ready to go?
Yeah, ready to go. Thanks for having me. I've seen a couple of your podcasts, so you're doing a great job here. So excited to be on.
Awesome. Thank you. No, I really do appreciate that. Thank you so much. So, I guess without further ado, let's start from the beginning. Just walk me through your career journey in real estate finance. Highlight some of the key decisions, maybe experiences that shaped your path from your early roles to where you are today. And I know you personally, and I know you've had quite the extensive career at such a young age. So, give as much detail or as little detail as possible.
Yeah, sounds good. I'll actually go back like all the way to, I guess, first year of university, just because I feel like that's kind of where my, uh, I guess, journey in either real estate or banking has kind of come from. So, in my first year, I remember I was like 18, first year of university, and I went to this career kind of convention, like a mini convention with TD Bank. And they came over to Sauder to talk about their retail banking. And so what I did was I applied for a job as a bank teller. And so I started working as a bank teller to kind of just make some money part time to get myself through school and all that kind of stuff. And so I had a lot of success there. I think I really enjoyed kind of, first of all, like being able to learn about personal financing. I didn't even know how like a mortgage works. If you had said, principal and interest to me, I'd be like, what are you talking about? I didn't know how card cycles work. Like I had no idea about anything about finance and personal finances, which I think is really important. And so, yeah, got a lot of experience as a bank teller, and then I got promoted up to like a junior financial advisor. When I was a junior financial advisor, I would do like small home equity line of credits or small mortgages for people. It was a really good experience. And what was more interesting was I was only 19 at the time. So I was fully doing like, if, a family was wanting to buy a house, their first house, I would do the mortgage for them. And so I was super young, but I kind of got to learn a lot of, this personal financing stuff like that at a very young age. So that was awesome. And then after that, got promoted up to a manager of customer experience. Basically, I was a manager of the bank tellers. So I had, I think, like 4 or 5 people that would report up to me. And then after that, I actually wanted to get more into the technicals of things. So I did a specialization in accounting, and I kind of wanted to learn more about accounting and how it all worked. And I found that, at TD in retail banking, as I was working part time, it was awesome because you got to be able to interact with real clients and work in a pretty professional environment, but you didn't get much technical or hard skills, right? So I did a corporate finance slash corporate accounting internship at Quadreal Property Group. And if you don't know Quadreal, Quadreal does the commercial real estate investment for BCI, and BCI is the pension fund for BC. And so, super new company when I joined. I joined in 2020. They had only formed in 2016, but they already had like tens of billions of dollars of assets under management because they kind of broke off from BCI, right? So when I was there, it was awesome experience. Some of the things that I got to do was, look through the financials of the parent company, doing tiebacks between our general ledgers and the numbers that were in the financial statements. Looking back at all the different notes, doing credit memos that would go up to the, like the C-suite executives. So it was a lot of really cool work, and had great people that I worked there with. But I think when I got there, what I realized was, hey, I really like real estate and I don't love the accounting part. I think accounting is super important for, any finance role, but I didn't want to just do accounting. And so I kind of, I guess, defaulted back to like my bank mode, where I did a internship in commercial banking at Scotiabank, right? And so Scotiabank has a program called the Commercial Accelerator Program, or they call it CAP, and it's a rotational program that puts you through different divisions within the commercial bank. So I started off with Roynet Capital, and Roynet Capital, they do like mezzanine loans, high leverage real estate loans, things like that, and then risk management, and then commercial real estate, and then just normal commercial banking. And so going into that program, I actually told my program manager, like, hey, I want to do commercial real estate finance, and that's it. I'll go through all the different divisions, of course, but I want to do commercial real estate. And honestly, I said that to even the people in the different divisions, like where I would just tell them, I don't really want to work here. I want to be in commercial real estate. And so that's not really advice, right? Because you don't want to tell the people that you're working for that you don't want to work there. But I was very I had a pretty clear goal that I wanted to do commercial real estate, and that's what I was passionate in. And so that was me as an analyst. And then I got an offer to move out to Toronto as an associate with Scotiabank in their commercial real estate division, which was awesome. So I spent about a year and a quarter there. And then when I moved back to Vancouver, I joined RBC as an associate director, which is still like a lot of underwriting deals, annual reviews, and of course, having interaction with clients. And then last year, November, I got promoted to a director. So basically, what I do right now is I'm the main relationship manager for a number of commercial real estate owner operators. So whether they own, a bunch of retail buildings or retail spaces, hotels, which is really interesting, which is a new space for me as well as developers. So developers, you think of a big high-rise condo that's being built in, let's say, Coquitlam or something, right?
Mm-hmm.
A developer is building that. And so I'll provide the construction financing. I'll also do like the land financing. So when they buy the land, they'll come to a bank like RBC and go to someone like me and say, hey, like, we bought this land for, $30 million and we want financing on it to help with that. And then eventually it'll go to construction financing. So that's kind of, the long-winded answer of, my background. It's kind of started off with a little bit of banking, a little bit of accounting, and then now I'm in commercial real estate banking. And so that's how I kind of got to where I am today.
Awesome. No, that's a phenomenal answer. And I just wanted to double click on the part that you said when you were going through at Scotia, the different departments or the different, what was that called again?
Yeah, the commercial accelerator program, the
Commercial, yeah,
rotational
the
program.
cap program. Exactly. When you were going through that, what, obviously I don't know the program over like too well, but what were some of the other options that you could have taken? Why did those not really speak to you as much as the commercial finance stuff?
Yeah, that's a great question.
Or
And
sorry,
I
commercial
wouldn't
real
even,
estate, not commercial finance. My bad.
yeah, all good. I would say that it's not that they didn't necessarily speak to me, but I was very focused on wanting to work in commercial real estate and work in commercial real estate finance. And so, for example, the first one, Roynat Capital. So, you'll do mezzanine loans, which is, just higher priced, um, and, not as low priced as obviously like senior secured lending, but not as, costly as equity as well. But so you'll do things like that, or management buyouts. So if the management of a company wants to buy out the owner, of a business, then they'll need financing for that. And so we would provide financing for things like that as well. So it was very interesting. Even like leverage buyout financing, like things like that. And so it was very interesting. I got, good experience, but there's only so much experience that you can get in 4 months of the rotation, right? I also did risk management. So we would adjudicate deals for different divisions within the commercial bank. And so they would send the deals to us, and then we would either approve, reject, or suggest new structures for the deals. And so, yeah, like it was awesome. I think what I wanted to do specifically, and I feel lucky enough to be able to have had a kind of specialization or something that I wanted to specialize in so early in my career. But I kind of just thought that if I specialized in commercial real estate finance and I really dialed in on that, then I could get pretty far. It is niche, but it does make you a specialist, right? Rather than being someone that finances for, many different industries or things like that. Whereas I would be able to understand one industry very, very well. And so that's kind of why I wanted to do it. And, even, my experience at Quadrille, like we would see some of these projects, right? Like in like Germany and a master plan community where you would have 10 towers going up with retail, and you would have thousands and thousands of people that come to go there and like work there and hang out there. And you're literally building communities when you're building real estate if you're doing it in the right way. And so that was just something that I got super passionate in when I was doing my internship. And that's kind of just how I wanted to, ride out the rest of my career. And I think it has worked out, quite well for me thus far. And that's kind of what I want to do for the rest of my career as well. So.
For sure. No, that's awesome. My next question, actually, we sort of already answered. I was just gonna ask about, how did you decide which areas to focus on? But the second part of that question that I do still want to ask was, what challenges, if any, did you face while building expertise in this niche that you were speaking about?
Yeah, I think the number one thing was that you would see a lot of different people coming into this space, and they had a pretty extensive background of, at least in the classroom, knowing different parts of real estate. Whereas for myself, like I actually took one real estate course, and so I didn't really know too much about real estate coming out of university. All I knew was that I really liked it and I wanted to spend my career doing it. And so, you know, I think initially it was kind of difficult because a lot of these other professionals that kind of started at the same time as me, they had extensive experience doing case studies, or they have extensive experience doing, real estate investment decks and things like that, where they would have taken, maybe 10 courses in commercial real estate, whereas I took one.
Mm-hmm.
And so that was a little bit difficult, but I think what I found was that you learn so much on the job, right? So just being able to be, extremely humble and ready to learn and hungry to learn, and being flexible with, okay, like I think I know a lot, but there's so much more to learn. And so I think that really helped me. Another thing was finding people that were really good at their job and trying to learn from them. I think I'm really good at latching on to really good people, and so that's kind of how I've went about, I guess, my career thus far, where you get really good mentors and you kind of just tell them, hey, like I love what you do, I love how you do it, and I'd love to learn more. And I think as long as those people see that you work extremely hard, then they're willing to teach you, just because that's kind of the way that they probably learned as well. So.
Mm-hmm. I gotta ask, was the one real estate class you took, was that at Sauder?
It was a solder. Yeah.
Which
It was
do you remember the course code, or which class it was?
yeah, 306.
I'm trying to remember
Yeah,
the
it was
name. Do you
real
remember the
estate
name?
economics. Real estate
Oh,
economics.
okay. I
Yeah.
can't remember if I was that with Sir Somerville.
No, no, it wasn't with him.
Oh, okay, okay.
Yeah. Yeah. It's really funny because, a lot of people now, or a lot of students, they kind of reach out to me and they're like, or other people say, hey, do you know this professor at UBC, blah, blah, blah. But like, I don't know any of them, just because I actually I didn't study real estate, but everyone thinks I did because I love real estate so much. But yeah, I took this COM 306. It was real estate economics. And so in terms of the actual, I say, practicality of it, like I don't use any of that now. But I guess it was a course that kind of like piqued my interest a little bit. It was still a great course to take, but yeah, it was just like completely separate from what I do now, I think.
For sure, for sure. Quick disclaimer for the audience. We're not bashing Sauder in any way, but I think
Yeah, yeah.
anyone who works in finance now or has done anything, any sort of career in finance can relate that not all of it was applicable at all times. Little
Yeah.
asterisks.
Yeah, yeah,
Um,
yeah.
uh,
Great asterisks. And what I'd say too, though, is like, uh, I mean, that's for a lot of different um, specializations, right? So not just solder, but like, probably a lot of things that you're doing in any division. But what I'd say though is if you're gonna do real estate, then UBC is probably one of the top schools in Canada to
mm,
do it, just because a lot of Eastern schools, they actually don't have a specialization in real estate at all. My understanding is that SFU doesn't either. And so if you're going to do real estate and you're okay with the West Coast and Vancouver, like UBC is a great school to do real estate. So yeah,
That's good to know. I didn't know that, so I learned something new there.
yeah, yeah, yeah.
Uh, so looking back, what were some pivotal moments or mentors? You don't have to name them if you don't want to, in your career that influenced your approach to real estate. How did they help you develop the skills needed to be successful and find yourself in the position that you're in today?
Yeah, that's a really good question. I think in terms of a pivotal moment, I would say is getting that internship at Quadrille. Just because without it, I just wouldn't be in real estate. I think I probably would have done the whole, big four accounting, get my CPA, and then just see what happens from there. But I think, applying for that corporate finance slash corporate accounting role at Quadrille, I had one interview, and then an hour after I got back to campus, I got a call saying that I got the job, which is absolutely amazing. Um, that was in the early stages of Quadrille's internship program, so it's a lot harder to get internships now. But I think back then, they took me, so I'm very grateful for that. And yeah, that's a good question on the mentors. I mean, I've had tons of great mentors throughout my whole career, starting from when I was 18, starting at TD to even the many mentors I have now. I think I don't want to like call out any names just to be fair to everyone who's kind of contributed to my career, but I think one thing that I would say to people is that having a good mentor and having someone to look up to is huge. Like it can help you so much. It can shave off so many years of trying to figure things out in your career, or um, they've experienced so many things that you haven't, and they can, instead of you having to go through that pain, they can just tell you, right?
Mhm.
And if you're willing to learn and if you're willing to listen, then that's great, right? And it's on you to be able to, I'd say, keep up that relationship. And so, for example, there's an organization within BC called the Urban Development Institute, and so that's like a real estate kind of institution that a lot of the real estate developers, as well as financial institutions, as well as brokers, like they're all involved in. And so I'm a mentee, and I have a mentor that used to work for a bank and now works for a broker and does debt and equity brokerage, and so things like that. And I've learned so much from him, and it's great because we're probably going to do a deal one day together just because of how close the industry is. So yeah, I've had tons of mentors, even shape the way I look at client relationships and shape the way I look at development risk and all that kind of stuff. So tons of mentors that in that space as well.
Awesome. Awesome. It's yeah, very, very important to have mentors, I think, and not just in real estate, but all parts of finance and business. And just, there's so many mistakes that can be made that I don't costly mistakes that can be made. And it's
Yeah,
good to always learn from somebody who's been through it. I know Ethan will watch
absolutely.
this, and I've definitely still make mistakes every now and then, despite him telling me over and over again. But that's okay.
Yeah,
We're learning.
yeah.
Um,
Moving on.
yeah, exactly. So my next question for you, Josh, is the real estate landscape has evolved. I think especially in Canada and maybe even specifically Vancouver. I'll let you speak to that, but has evolved with market fluctuations. There's been regulatory changes. I don't know if AI or any other technological advancements have shaped the industry at all, but how have you adapted your strategies over time to stay ahead? And what trends do you see shaping the industry in the coming years, if any?
Yeah, that's a great question. And so I think right now, I mean, obviously we're in a downtrend in the market, right? I think so. In my line of work, I can only do as much work as the my developers want to do, my clients, right? And so whenever my clients go to a institution to get financing, I'm hoping that it's me first, right? Because a lot of these developers, they're quite large and they have different, I guess, relationships with many different banks. And so my goal is to have such a great relationship with my client that they'll come to me, and they'll come to me with anything, and they'll come to me with kind of their best deals and whatever they, and even advice, right? So whether it's not a deal, they say, hey, we're looking at this. How would you underwrite this deal? And just bounce ideas off each other. And so in terms of how I've adapted to this climate, I'd say that relationships in real estate is everything. And so if I have a good relationship with my clients, yeah, they'll come to me for advice, and they'll come to me with opportunities, and I'll come to them with opportunities too, right? So however we can kind of optimize their financing solutions or whatever that we can offer them in kind of a more turbulent time, that's kind of what I'm hoping to do. And so in terms of trends that I'm seeing in the more macro level, we had a lunch and learn today at work. We had someone from Blackstone come over from Toronto and talk about their real estate and private equity fund. And so one question that we asked them was, how does the data centers apply to their real estate strategy, right? Because the amount of energy that it takes for you to do one like chat GPT prompt is substantially more than you doing a Google search, right?
Mm-hmm.
And
Mm-hmm.
so as AI gets more and more prominent in everyday life, and as you're using AI for like absolutely everything, I know a lot of my friends, especially in tech, they use AI daily, and they use AI multiple times a day, and so you need the infrastructure to be able to support that. And so you're seeing, big funds like like Blackstone, they're they're investing in building these data centers that are very much needed for these like AAA tenants, like like these big tech companies, right? And so I see that as one major trend. Obviously, office, after COVID has really taken a dive. So we'll see what happens there. And I think over the long term, over the last few years, over the last like 15 to 20 years, what you've been seeing a lot from a lot of these major funds is investments in single family homes,
Mm-hmm.
all over the US. And so it's a very resilient um, asset class, but that's been happening over the last 15 to 20 years. But over the next few years, I see data centers as a really big, um, I'd say, opportunity for a lot of these big funds to be able to invest in and
Mm-hmm.
get a good return in.
Nice. No, that's I do want to ask. I don't know if maybe you would have any insight to this, but it's a question that popped in my head because I do remember coming out of COVID. I obviously quite familiar with the slowdown in, or I guess the lowered occupancy in office commercial real estate, and there was a lot of talk coming out of COVID that the some I guess office buildings were being looked at to transition to I guess like residential. And
Yeah.
I'm curious, is there any opportunity? And again, I don't know how if the data centers need to be placed in certain parts of the globe for any number of reasons, but is there any
Mm-hmm.
way that office space could be utilized as data center space in your opinion, or is that maybe to utilize some of the space in office that hasn't been occupied?
Yeah, that's a good question. I'm actually not 100% sure, but I guess it would depend on where these data centers are. So if you're thinking of like a 30-story uh, office building in the middle of downtown Vancouver, turning that into a data center, I don't think so.
Mm-hmm.
I think it would be more suburban areas with lots and lots of land.
Yeah.
And another part of that, which is kind of underestimated, is the amount of energy and infrastructure that you need to be able to power these data centers. And so those are the kind of different considerations, but it would be somewhere where you need a lot more land, or where you have a lot more land, rather than like very dense kind of places. But also, like, if you were to change an office building into a data center, like, it wouldn't be the highest and best use of that land.
Mm-hmm.
The highest and best use of that land would be to have it as like a condo building or a hotel or something like that. And I also don't think you'd be able to get the zoning necessary from the city of Vancouver to convert, like a office building in the middle of Vancouver to
Mhm.
a data center. It just wouldn't make sense. So,
Yeah, yeah, no, that's a great answer. I guess we'll see.
mhm.
Time will tell. But you're right. I
Yeah.
definitely don't foresee that in Vancouver. But we don't have a ton of time left. But I do have one final question that was part of the questions I wanted to ask you, and then there was one that I added on at the end. But maybe quickly, could you tell us, for anybody aspiring to build a career in real estate or real estate finance like you are, what advice would you give based on your own experiences? Maybe speak skills, mindset, networks that you found
Hmm.
most valuable. Um, and how do you recommend balancing risk taking with strategic planning in this field as it relates
Yeah.
to someone who's aspiring to build a career?
Yeah, that's a great question. And I'll kind of tell you the same answer that I tell a lot of like the students that reach out to me. But I'd say the first thing is if you want to build a career in real estate, then you need to be able to be knowledgeable about commercial real estate and also know what's happening in the market and show through your experience and actions that you're interested in real estate. And so I guess if I was in first year or if I was in second year, the first thing that I would do is subscribe to renx.ca. So it's basically gives you all the top stories across Canada for real estate. And it just gives you a newsletter every single day. And so you can literally take one or two of those articles, just read it, take 10 minutes, and you'll know a lot more about real estate than the average 18 or 19 or 20-year-old. And so I think that will actually take you far just because you'll know what's happening in the market.
Mm-hmm.
Yeah, and if you're a student at, UBC or SFU, like join the real estate club. And so just show these professionals that you have an interest in real estate. Another thing that I would do if I was back in university would be to, reach out to people and try to have like a coffee or a chat, maybe once every 2 weeks. I think that's pretty reasonable. And, be prepared for these coffee chats and be able to ask thoughtful questions and be knowledgeable about the market and kind of exactly what you want out of these coffee chats. And so I think a network has been very underestimated, especially when you're in university. I think a lot of people, and this is kind of what I did as well, is you you dial in your resume and you say, "Oh, I have the best resume, best cover letter, I have good grades, I should be able to get a job." I think it's very tough because a lot of these internships and entry level jobs, you get hundreds of applicants into it, and no matter who you are, unless you have the best resume in the world, it's really hard to stand out. But what makes you stand out and what makes it memorable for these people going through these resumes is if you have a chat with them and are able to articulate like why you want this role and why you want to work in real estate and why you want to work at that company. And so I think network would be the number one thing that I would kind of recommend, but there's a little bit of work that needs to go behind that, right? So knowing the market and just indicating that you have an interest in real estate.
Mm-hmm. So that no, that's phenomenal advice. And I'm sure us being in Vancouver, there's bound to be somebody who listens to this who wants to get into real estate, just given how popular an option that seems to be in Vancouver, especially. But that sort of wraps up all the questions I wanted to ask you, the ones that I jotted down. I do want to do like sort of a new-ish segment with all of anyone new who comes on the podcast. Can you give us one piece of finance advice? It can be unconventional, conventional, whatever you think. Maybe something people don't think of regularly. Maybe it's something that you've seen time and time again. Give us your best finance tip. Yeah, whatever you think.
Yeah, for sure. So I'll give it kind of like a two-parter.
Okay,
I'd say the I'd say the first one is like you never have too little money to start saving or start investing. And
great.
so yeah, if you're like 13 years old or if you're 15 years old, like even if you have $1 to put away a week, like just start doing that because I think the habit of putting money aside and saving is almost sometimes more important, especially in the early stages, than the actual dollar amount, right? So just get into a habit of being able to save. And the second part of it is, and I feel fortunate because I had this job in at TD when I was a bank teller. And so through work, I was able to kind of um, educate myself on personal financing or finances. But I would say take ownership of your personal finances. So what that means is, understand what the S&P 500 is, or understand why compound interest is important. But a lot of people don't do that, and they rely and they kind of lean on a financial advisor, right? And financial advisors and wealth managers and all these people, like, it's very important, and a lot of them will know more than you just because that's their career and that's what they do to make money. But it's really important for you to understand the little nuances and understand, why they might be saying the things that they are, and maybe the information that they have is better than yours, but you need to be able to have, you know an at least entry level, conversation about your own personal finances. So take ownership of that.
Hmm. Or you don't need to be an expert, but understand the
Yeah.
basics. And
Yeah.
yeah, I feel that also I feel, at least from what I've seen, really applies to fees. And I
Yeah.
know there's a lot of mutual fund products out there that people don't understand what expense ratios are, and then the fee management
Yeah.
fees. And there's so many little things like that that take 20 minutes to understand once you read about them, but people don't
Hmm.
bother to, and then it hurts them later on, or you get
Exactly.
surprises or whatever.
Yeah.
um, Josh, thank you so much for coming onto the pod. I really do appreciate it. It was great speaking with you and great seeing you again. I know it's been a long time.
Yeah.
Hopefully, we can have you on again in the future. Maybe if when you get promoted to another role, we can have another interview and talk about that.
Let's do it. Hopefully soon then.
Awesome. Awesome. Josh,
Awesome.
again, thank you so much for your time. And I'll talk to you soon, buddy. Take care.
Thanks, Alex. Thanks for having me.
Of course. Bye bye.
Okay. Bye.
So there you have it. That was a peek into the world of real estate finance with the one and only Joshua Sunwoo. We hope to have him on again in the future to continue this conversation. We were a little pressed for time today, and we greatly appreciate his time and incredible insights. Today's conversation was a powerful reminder that finance isn't just about theory, it's about real people making real decisions in a dynamic, ever changing world. It's about leveraging both capital and your knowledge to build something tangible. To stay connected and continue your learning journey, be sure to follow us and our sponsor, Trajecta University. That's Trajecta University. You can find us on Instagram, LinkedIn, and Facebook by searching for Trajecta University. Also, check out our YouTube channel at Trajecta_talks, where you can watch this episode and find a ton of other great content. All the links are in the show notes for you down below. So make sure to join me next time as we continue our conversation about building your financial future. And until then, keep learning, keep investing in yourself, and keep building for your future. I hope you have a fantastic Friday. Take care, and I'll see you next week.